Hey guys, welcome back to another video. In this video, I'm going to be talking about Chevron, and as we can see from Chevron, it's up about 57% over the last year. In the same time period that the S&P 500 is down about 15%, so it's completely dominating the market over the last year or so. And so I'm just going to look into the third quarter earnings results for Chevron, and then I'm going to figure out the intrinsic value per share for Chevron's stock so we can know if $185 is a good buying price to buy into Chevron from a value investing perspective. And so real quick, I found this news article in regards to Chevron titled Why Chevron Stock Popped and Then Dropped. And we can see they're talking about how on Monday, two analysts from Cohen and Wells Fargo basically raised their price targets for Chevron from $185 to $199. And so that obviously puts Chevron stock at a previous price target, but not the current one from these different analysts here. And then also JP Morgan lowered their target to $143 per share. And so that's the main reason why Chevron stock went up. We can also see that Joe Biden basically talked about how he might impose taxes on the profits that oil companies have been experiencing as a result of the recent increases in the price of oil at gas stations. And so we can actually scroll down here and see this was his tweet where he basically said oil companies made billions in profits this quarter. They're using these record profits to pay out their wealthy shareholders instead of investing in production and lowering costs for Americans. It's unacceptable. It's time for these companies to bring down prices at the pump. And basically, as we can see from this point right here, it's basically saying that if oil companies don't comply with lowering their prices at gas stations, then it's possible that a lot of the billions of dollars of profit that these oil companies are experiencing might be taxed by the IRS. And so either way, it might end up in a lose-lose for oil companies at the moment because they're either going to lower their profits by lowering their prices, or they're going to lose out on profits to an increase in taxes on their profits. So that's one of the main reasons why Chevron stock dropped by about 2% when that news came out. And so we can see right here in their income statement for the third quarter of 2022 compared to the third quarter of 2021, their revenue growth year over year was about $44.7 billion to $66.6 billion. So that's an increase of about 50% year over year. So that's definitely extremely impressive revenue growth for Chevron. And then we can also see for their net income increased from about $6.1 billion to $11.2 billion. So that's also an increase of close to a little under 50% for Chevron's bottom line here. Now this is their balance sheet. We can see they're comparing it from September 30th, 2022 to December 31st, 2021. Their total assets during that time period increased from about $239 billion to $259 billion. And the majority of their business is financed by equity as opposed to liabilities. They have $159 billion of total equity and $100 billion of total liabilities. And for their total equity, we can see the retained earnings line item has increased pretty substantially from about $165 billion to $186 billion. So that's obviously as a result of the increase in profits that Chevron has been experiencing, which is also partly the reason why their stock price has increased so much over the last year. And lastly, on page 7, we can see their cash flow statement to get a better look at the cash inflows and outflows for the business as opposed to just the accrued revenues and expenses on their income statement. And we can see that year over year for the first 9 months of 2022 and 2021, their cash flow from operating activities increased from $19.7 billion to $37.1 billion. So that is obviously also a pretty massive increase, almost an increase of 100% year over year. And of this $37.1 billion in the first 9 months of 2022, about $15.3 billion of that came in the third quarter. And after subtracting capital expenditures, they had about $12.3 billion worth of free cash flow from their cash flows in the third quarter. So that's obviously cash that they can then use to go and distribute back to shareholders, which, as we can see right here from their financing activities, that is something that they definitely did. We can see cash dividends from common stock for the first 9 months of the year came out to be about $8.2 billion. They returned about $2.7 billion of cash to shareholders through dividend payments in the third quarter. And then they also repurchased about 3.75 billion shares of common stock in the third quarter of 2022. And so right here, this is my discounted cash flow model for Chevron, trying to figure out the intrinsic value per share for their company. We can see right here that Yahoo Finance is estimating that Chevron is going to grow at about 14% for the next 5 years compounded annually. And then also they had about $21 billion of free cash flow in 2021. They have a net debt position on their balance sheet of about $8 billion, and they have about 1.9 billion shares outstanding. And so with these metrics in mind, it appears that their intrinsic value per share is estimated to be about $211 per share, with a 50% margin of safety of 105. And so this, compared to their current share price, means that Chevron is currently trading below their intrinsic value per share at the moment at a share price of $185. So they're unfortunately not trading at a 50% or 30% margin of safety, but they are still presenting a pretty interesting buying opportunity, trading below their intrinsic value per share. And then if you remember from the beginning of the video, they're also trading below the price target for Cohen and Wells Fargo, which was $199 per share. So on the right-hand side here, I have a competitor analysis comparing Chevron to some of the other bigger players in the oil industry: ConocoPhillips, Devon Energy, Occidental Petroleum, and ExxonMobil. And we can see that in comparison to these other oil companies, Chevron has sort of middling of the pack financial ratios. They have the worst gross profit margin. They have the second to worst net profit margin, right above ExxonMobil. And then they also have the worst, or the second to worst, return on assets after Occidental Petroleum. So from a competitor viewpoint, it looks like Chevron might not be the best buy compared to their competitors. But from an intrinsic value perspective, Chevron looks like it's definitely trading below their intrinsic value per share at the moment, so long as the company is able to increase at about 14% to about 7% over the next decade or so. With that being said, I mean, it looks like Chevron is presenting an interesting opportunity at the moment. Their stock price is up about 50% over the last year, where the S&P 500 is down 15%. So not really sure what to think of Chevron at the moment. Definitely keeping my eye on this stock, but I'd love to know what everyone watching this video thinks about Chevron. Is it a good buy right now at the current share price? Let me know at the comment section down below. Leave a like on the video, subscribe to the channel, and I'll see everyone in the next one.